Hello fellow traders, welcome to my channel Alice Binary Guides. If you are tired of endless copying of other people's signals and want to finally learn how to analyze the market on your own, then this video series is just for you. Today we're starting a series of 3 videos that will teach you how to see the market as a professional. And market analysis can be divided into 3 key areas: analysis using indicators, price action, and of course candlestick patterns. And in this series, we will take a detailed, close look at each of these areas to give you a complete toolkit for binary options trading. And today, we are starting with indicators. It's a powerful tool that will help you predict market movements and find the best points to enter a transaction. If you are ready to take the first step, conscious, mindful trading, and then let's get started. Let's start with a simple question. What are indicators? Indicators are a mathematical formula that turn into a convenient visual graph on the screen, allowing traders to quickly and effectively analyze the market. In fact, these are tools that simplify complex calculations based on historical data such as price and volume. Thanks to indicators, we can see where the price will turn, understand the current trend, and of course assess the volatility of the asset. They are needed both for beginners who are just starting their way and experienced traders who want to improve accuracy of their decisions. In binary options, unlike Forex, we do not manage the transaction after it's opened. Everything is decided here at the moment of expiration. Therefore, the key point for us is the accuracy of your prediction based on your analysis and not the management of the transaction. Our goal is to predict in advance where the price will go up or down based on accurate data. So now that we figured out the basic concept, let's dive deeper into the world of indicators. So first things first, for us to add indicators to our chart, we need to open Quotex and click this button right here. So you will see all the indicators, and they are divided in 2 types: trend indicators and oscillators. And but I disagree just a little bit with that. I would say trending indicators, but lagging or slow indicators, and not oscillators, but leading indicators. So that basically means that the formula is calculated differently. If we're talking about trend indicators, for example, fractal, we will see this picture on the chart. It's a really simple indicator that shows us the series out of 5 candlesticks where the middle candlestick is going to be lower or higher than the 2 previous ones. And of course, as you can see, this dot is there after the last candlestick is closed. So it shows us what's going on in a real time, but also it kind of relies on the past. That's a trend and indicator. If we're talking about oscillators, for example, let me choose MACD. What do we have? Let's close the fractal and MACD getting bigger. Yeah. So this indicator is actually analyzing everything in the past, but also it makes a little predictions in the future. So it's moving a little bit faster than the price. If we get the signal for an uptrend or a downtrend from this indicator, this is a prediction. So that means that if you use indicators that are working faster and not working with only the past data, they will still give you mistakes and give you false signals. For example, right here, we see that the indicator gives us the signal that the price is going to go down. So the green line crosses the red one from top to bottom, but this is not guaranteed that if you open the deal for the downtrend and it's going to be closed in black, because the price can meet the support line, and from that point the price can move upwards, and no one can predict that. Indicators are great, this indicator, and all of them are great, but you still need additional confirmation. Your likes and comments help our channel grow and create more high quality content. If this video turns out useful for you, please like it and share it with your friends. Don't forget to subscribe and click on that notification bell so you don't miss next videos in this series. Let's look at how indicators work using the example of trend indicators first. This is one of the main trend indicators, moving averages. For example, SMA is one of the simplest and most popular indicators. It shows the average price of an asset over a certain period of time, smoothing out fluctuations and helping to identify trends. The formula in this case is really simple. The indicator takes data on the closing price for the period that we specify ourselves and finds the arithmetical mean or an average. When we add indicators moving average on the chart, we will see this kind of a line, and that basically shows us our moving average. And in this case, we have period of 10, and I'm going to choose yellow color because it's my favorite. And that means that indicator works with the last 10 candlesticks. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The indicator is working with all of these 10 candlesticks. If we take our average from all of them, we will get around 95.133. And of course, the period of 10 is really good for analyzing short-term trends, but more often we use medium short-term trend, and it's a period of 25. The indicator is analyzing not 10 last candlesticks, but 25. So around right here, all of those candlesticks are being analyzed, and the price, our average, is really far away from the price. And that is normal because that shows us that the price is actually in a really good downtrend. If you move a bit far away, you will actually see that the price is in downtrend. And if we want to work with global trend, of course, we need bigger periods. Some people use 50. I usually use at least 100, and it actually shows us a global trend, what's going on with the price. In this situation, we see that really for a really long time we were in the uptrend, and when the price is higher than the moving average line, that means we need to enter into deals for an uptrend, and when it's lower, only for the downtrend. It's a really good instrument that everyone should use, but of course it has its flaws. So no one is telling you that if the price is higher than moving average, it's never going to go down. Of course it will, and at this point you can see that the price actually broke through this line. But for the general understanding of the trend, this indicator is amazing. What also important to know is that moving average can be different types. For example, SMA, which we use right now, it is simple moving average. It's really simple moving average basically. So for example, if we take exponential moving average, EMA, the line of course is going to change. This is also the moving average, but the bigger priority goes to the latest data. And this moving average, it will be not as slow, not as lagging. Also, I wanted to add that some indicators can be used by themselves and strategies can be created from them. So if we take simple moving average with the period of 50, which is going to show us medium-term trend, and we will add another moving average with the period of 50, which is going to show us short-long trend. Jesus, short-term trend. If you look at the chart, you will see when the moving averages are crossing each other. So for example, right here, this will show us the new trend. Of course, this strategy has its flaws again, as always. For example, here a lot of different signals and only one of them actually worked, but the strategy exists, and with a lot of practice you can use it. So for example, right here we have a great example. The blue line crosses the yellow one, and that creates an impulse for a new uptrend. Next big trend indicator is Bollinger Bands, which indicates the presence of deviation from the standard value. Bands create the corridor within which price movement is considered to be normal, and this is especially useful because an indicator helps to identify the moments where the price goes beyond the boundaries, signaling possible reversals or the strengthening of the trend. With indicators like Bollinger Bands, everything is a bit trickier than moving average, but still really easy to understand. So for example, right here we have two windows for settings, period and deviation. We're not going to talk about them right now, a bit later. Before that, let me change the color of the chart because it hurts my eyes to look at it. like this is good. So period, it basically shows our moving average in the middle. It's the same one as we just talked a bit later. And of course, let's choose the period of 15. So this is the period. And also we have deviation added in this case, and this is the difference from which the price is moving away from the channel. Basically, Quotex uses just one, and it's not really correct. So 1 second, I'm gonna change it myself. 1.5, so 1.5, and it basically creates a smoother chart, and it's much easier to analyze everything. So what we talked before, we said that when the price is in the Bollinger levels, in the corridors, the price is not really doing anything interesting, anything exciting for us. But in this point where we see a really fast growth and a downfall of the price went outside of Bollinger Bands. And of course, there was a signal for us to enter into a deal for a downtrend. The RSI, Relative Strength Index, is an indicator that shows who is currently having a greater influence on the price market, sellers or buyers, due to which it allows you to determine overbought and oversold levels. A value above 70 indicates overbought and below 30 indicates oversold. Indicators like RSI, they are created for us to find levels of oversold and overbought areas. They basically measure the level of pressure on the market from both sides, and on the basis of that, they give us signals. Let's add RSI on our chart, and we see it right here. As you can tell, we have two lines, the lines of 70 and the lines of 30. Both of the levels, they show us overbought and oversold areas. So if the green line is actually crossing higher than the level of 70, that signals us that the market is in overbought area and the price is going to drop. If it goes beyond the 30 lines lower, it means that the price is in oversold area and there is going to be the growth of the price. In this situation, we have a couple of examples. So right here, just a little bit, the line went outside of the 70 level and the price is actually dropping. Good example. Again, we see the similar situation right here. It went to like 75-76% and the price dropped again. But what is important to understand, let me find a bad example. For example, right here we actually have the price, the green line, not the price, is moving outside of the line of 30, starting from this candlestick, but still our price was going down and not rising. Why this has happened is because the market can be in so oversold and overbought areas for quite a while, and this is the major flaw of indicators like that. That's why you shouldn't use only signals from one indicator. You need to use additional confirmation. One trick circus there, we talked about it many times. You need additional confirmation, and of course that's why you need to watch all 3 of the videos from this series to know what additional confirmation you can use in which situations. So for example, right here, the price went outside of the level. So from here, signal is given us from the indicator for the uptrend. But we have momentum red candlestick that shows us that the bears have a lot of impulse power that will move the price down. So that means we need to ignore RSI signal. But if you would only use the indicators, you will lose the money. So that's why you need to be really careful with the indicators that work with the past data. Stochastic oscillator is another oscillator that measures the position of the price relative to the range for a selective period of time. Like the RSI, it helps to find the moments of reversal. My favorite indicator, stochastic, works on a similar basis as RSI. We also have our oversold and overbought areas on the levels of 30 and 70. And in this case, we have actually 2 lines. So why do I love this indicator? Because it shows us the signals to enter into a deal. So same system as with RSI, we are looking at the moments where the lines are going outside of the levels, but you look at 2 lines and you need to find a specific way way specific points to enter into a deal. So for example, starting from here, the lines went outside of the area, but the signal actually went a bit later because the lines are crossing together outside of the level a bit later. And this is actually a signal. Two lines crossing each other outside of the levels of 70 or 30. I actually wait for the price to get back, the line to get back to the level of 30, like in the middle of them. That basically gives me additional confirmation that the price is actually moving up or down. So I usually go on the second or even third candlestick. So with this indicator, it gives a lot of good signals. For example, first one shows us the crossover of lines going outside of the level and the price actually dropped. This signal is actually a bad one. This one that would be the full signal and we would lose our money, unfortunately. But in general, we have a lot of situations, a lot of examples on the chart. So from here we could enter into a deal and get the money. Here also, same here for this one, for a downtrend. So basically this indicator is more balanced, and that's why I love it so much and I use it with most strategies. Indicators are a useful tool that help traders predict market movements, but it is important to remember that they are not a guarantee of success. And here are some main pros and cons of using indicators in binary options. So, some pros. They help you see trends and pivot points, and also it can be combined with other analysis tools, and of course it's easy to use for beginners. But let's talk about cons. So, sometimes signals can be delayed, and also they can give false signals in case of a strong trend. Do you want to learn how to combine indicators correctly to create a successful trading strategy? Join my online academy where I share my trading and technical analysis knowledge. Lessons and tips are available completely for free. The link is in the description box down below. Now that we have discussed the main indicators, let's talk about how they can be used in real trading strategies. And one of the simple but effective strategies is Stochastic plus EMA 100. As you understand from the name Stochastic plus EMA 100, we need two indicators, Stochastic and of course EMA 100. Let's make Stochastic a bit bigger. And let's add moving average with exponential moving average type. As I said before, it's the same moving average, but the priority is in the latest data. Period is going to be 100 and the color is yellow. As I said before, that basically means that if the price is higher than exponential moving average, we will only try to find entry points for an uptrend to work along with the trend. If it's lower than the EMS, then of course we're trying to find entry points for the downtrend. So basically we have Stochastic as the main base of the strategy, and additional confirmation as EMA. Let me find an example for you and show you how it works in real life. Okay, so guys, so we found a great entry point. So of course you can see the crossover of our lines. Stochastic is going outside of the level of 70 and the green line is crossing the red one from the top to bottom, and of course the movement is continuously moving down. The green line is already in the in the middle, closer to the level of 30, so that's a good sign. But some people will look at this picture in a really small way and say that there is going to be an uptrend, but we have exponential moving average and we open a deal for 3 minutes and the investment is 2% from my balance. We're gonna wait for 3 minutes as always and see if I was right to use additional confirmation or I was not right at all. Okay, so you guys, you can see that I was right and we get our money. So as I said, it's quite easy, really cool strategy, only with 2 indicators, but actually really effective. So today we learned that indicators are a powerful tool for market analysis that helps binary option traders make more informed decisions. But remember that you should not rely only on them. Always take into account other important factors, which we will discuss in detail in the following videos. And in the meanwhile, like, subscribe to the channel and leave a comment down below because it helps to develop our project. And don't forget about our half-hour analysis of the price action, the link to which is already waiting for you in the description box down below. If you didn't watch it before, this is time to do it now. And that's going to be it for us for today. Thank you so much for watching, and I will see you in the next one. Bye bye.